Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil edges lower as Iran and Israel agree to hold fire for now. That's after President Trump urged de-escalation. OpenAI files confidentially for an IPO, joining the race a week after Anthropic. A listing could come as soon as this fall. And Asian stocks rebound after their biggest drop since March as Middle Eastern tensions ease and the AI rout pulls back. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a look at what markets are doing this morning. Now, U.S. futures are now edging higher, 0.2 higher. They were a little bit lower this morning, but we're seeing a sense of relief when it comes to the AI trade. Again, a rebound, but there's still a sense of caution. Listen to what Bank of America analysts said on June 5th. There are too many red flags in U.S. equities. This is a direct quote. And then the notion there is take profits. So again, we're seeing a sense of caution, 0.2 higher. The S&P not doing as bad as it did last week at the close on Friday. But again, the sense of relief is catching up to Asian equities, 1.98% higher, almost 2% higher. The Kospi in South Korea is also rebounding. And we're seeing gains across the board with the AI trade coming back into the picture. Oil prices not doing as much as they were doing yesterday, 0.9 down this morning. Brent at $93 a barrel. No resolution in the Middle East, but at least for now, Israel and Iran stopped exchanging fires. And then when it comes to the yield on the U.S. Treasuries, the 10-year notes, it is not really doing much. We await key economic data out of the United States tomorrow. That is CPI data. So we'll wait and see what the yield on Treasury notes does, and then the bigger inflation concerns as well. But let's take a look at what Asian markets are doing this morning. Winnie Su is in our Hong Kong studio for us. Winnie?
Good morning, Abir. I found it quite interesting when you mentioned Bank of America saying to take profit, while we actually had a note from JP Morgan this morning saying to buy the dip. And that's kind of what we're looking at when it comes to the Asian market today, with the MSCI Asia seeing a bit more stability, up 2% after having fallen about 6% in the past 3 sessions. And it is helped by that easing geopolitical tensions in the Middle East, with oil prices also lower, but also investors looking for more opportunities after that big AI sell-off. And hence you can see that Kospi here, which was down about 8% yesterday, driving gains today up 5.7%, with gains also followed by Japan's Nikkei 225 as well as Taiwan's TAIEX index. Now you flip the board, we also take a quick look at the latest numbers from the China trade. And when it comes to the trade front, we can actually see that export growth, in fact, is very strong. We are looking at the numbers up 19% year over year, and that is at its fastest pace in 3 months. Also topping estimate of 15%. Now that is really being driven by the AI-related demand, including a pickup in the exports of chips, computers, for example, as well as a bit of front-loading amid the geopolitical tensions. In terms of import, we are also looking at quite positive numbers, up to 27% year over year in May, also topping estimate of 26%. Back to you, Abir.
Winnie Su in Hong Kong with those details. Now let's return to the geopolitical story in the region. Iran and Israel have agreed to end strikes against each other. That is after a flare-up in violence threatened to derail peace talks and led President Trump to appeal for de-escalation. However, both sides are threatening to respond if attacked, with Lebanon still a key sticking point for Tehran. For more, we're joined by Bloomberg's Dan Williams in Jerusalem and Jill Deesis in Hong Kong. Dan, let me start with you. Yesterday we were talking and you had to go because of the sirens that were sounding in Israel. Now, both sides, Iran and Israel, have agreed to de-escalate. They both agreed to a ceasefire after a phone call with President Trump. But Lebanon is a key sticking point. Israel not willing to leave Lebanon yet. So how much are we expecting another military confrontation between Israel and Iran at this point?
Abir, that depends on whether the Iranians will make good on their threat to again attack Israel. Yesterday's flare-up began with an Iranian attack on Israel for the first time since that 2-month truce with Iran was agreed. Whether this time it will carry out on its threat to resume that attack if Israel continues operations in Lebanon, specifically against Hezbollah, an Iranian ally. Those operations have continued. Iran has not resumed attacks. So it appears Israel has ended this round with the upper hand. As you noted, this was not really about Iran, this flare-up. It was about the rules of engagement between Israel and Iran, or Hezbollah being the cat's paw of Iran in Lebanon, in that second front in Lebanon. The Israelis are fully committed there. They're fighting a shooting war without the United States, unlike Iran, which is in a stalemate with the United States, where Israel is a secondary partner. So the Israelis are fully committed to getting what they say are their strategic objectives there in Lebanon, while Iran is doing what it can to preserve Hezbollah from that Israeli offensive.
Yeah. And Jill, just turning to you and what is happening in the United States, Dan alluded to that slightly, but President Trump is facing a lot of pressure domestically, especially with those rising energy prices, but also with midterms looming, polling there as well. What can you tell us about those pressures and what the president is expected to do?
Yes, that's right. And I think that you got a little bit of a flavor of this when Trump appeared at sort of via video link at a campaign rally for South Carolina Republicans overnight, just saying, we're going to see total victory, he said, within the next couple of weeks. Energy prices, oil prices, rather, will come down. So you do see how a lot of these things, these price pressures, some of those dramatic effects that are a result of the war are really weighing on the minds of Trump and other Republicans in particular within the United States. I mean, when it comes to the midterm elections happening, those general elections happening in November, you have to think that a lot of these domestic economic issues are really weighing on the minds of voters. And what they really care about are what fuel prices are looking like, what inflation is looking like, how much it costs them to sort of fulfill their daily necessities. And that does historically really weigh on their minds when they choose who they're going to go and bat for at the polls. So when it comes to Trump, what his administration is looking at, what Republicans are looking at more broadly, easy to imagine that they'd rather not have a conflict that is going to continue to drag on for months and months and months that could put pressure on those prices when voters are actually going to the polls. Now, we're already seeing several major primary elections, including some in South Carolina and Maine that will be happening on Tuesday in the United States. So again, this is already sort of entering the minds of voters, but really is just going to gear up as we get closer to those midterm elections, where that is kind of the opportunity for Trump and the Republicans to sort of prove, whether they should, increase their control over the House of Representatives, over the U.S. Senate, and it gives them, quite a lot to think about in terms of whether or not there's a mandate to be had over the next couple of years as Trump concludes his tenure.
Yeah. Bloomberg's Dan Williams and Jill Deeses, thank you for those insights. Now, the New York Times reports a U.S. Army Apache helicopter gunship went down near the Strait of Hormuz on Monday. Its 2 crew members were safely rescued. Times sources say the incident is under investigation and it is not immediately clear what caused it. Now let's turn to the AI story. OpenAI has filed confidentially for an IPO, joining its rivals in a race to tap public markets to fund its growth plans. A potential listing could come by the end of this year. Manuel Baigori, who leads our deals coverage in Asia, joins us now. Manuel, OpenAI joins the club. What does this say about its plans, its intention to IPO? What does that say about its broader plans?
Well, it's a very exciting new step in the direction of a potential listing, this time by OpenAI. And it's definitely, heating up activity in equity capital markets in the U.S. We've seen, obviously, SpaceX keeping us super busy and everybody on the watch to see how it happens potentially this week. And then, obviously, others lining up, other big multi-billion-dollar potential IPOs in the horizon, and OpenAI is definitely one of them. They just filed confidentially documents for that potential IPO with the SEC, and obviously they are aiming to list before year end. But early stages, and it will take obviously the next few months until things materialize.
So let's talk money. How much will the company be worth in an IPO? How much could it possibly raise?
Yeah, that's a great question. I mean, it's still a little bit too early, but obviously, given the valuations that we've seen in artificial intelligence related companies, we can expect something really, really large. I mean, obviously, SpaceX, as we all know, is started to be the world's largest ever IPO. OpenAI, perhaps not as big, but it will be fairly close in terms of size and valuation. I mean, it's still a little bit early, but we are looking into, tens of billions in terms of fundraising and hundreds of billions, if no more, in terms of potential market cap. But it's still a little bit too early to tell. It will be definitely one of the biggest events in terms of transactions for this year, for sure.
So, Manuel, is it a race with Anthropic at this point? Is there enough investor interest for both IPOs?
Yes, that is in everybody's minds. It's like how long the party is going to last. Definitely, there is a lot of demand from investors globally in the US, in Europe, and here in Asia, we're seeing a lot of that as well. Now, everybody is wondering, okay, if there is so much money being raised for this particular company, is there going to be enough for the others? And that is why we are seeing this race, very competitive race for everyone to raise funds as quickly as possible. But whether or not there will be enough for everybody, whether or not we are seeing a bubble before us, still remains to be seen. For the time being, definitely there is a lot of demand. Everybody wants to jump in the bandwagon, and they want to make sure, investors want to make sure that they don't miss out in this potential tremendous opportunity.
Yeah. Manuel Bergori, who leads our deals coverage in Hong Kong with the latest details on that IPO. Now, sources say SpaceX's initial public offering is well oversubscribed, with multiple institutional investors placing orders for about $10 billion or more of shares. The company is offering some 555 million shares at a fixed price of $135 each, which would raise about $75 billion. That would make this the biggest IPO ever, topping Saudi Aramco in 2019. And still ahead, Saxo tells us why Asian markets are under pressure, but why they don't believe this means the AI trend is over. More details on that ahead. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Now, Asian stocks are rebounding from their biggest drop since March. This comes as tensions between Israel and Iran ease and the sell-off in AI shares loses steam. Joining us now is Charu Chanana, SAXO Chief Investment Strategist. Charu, thank you for joining us this morning. Look, let's start with the moves from this morning. I'm just seeing the Kospi in South Korea is surging 6%. Now, we saw a brief pause in this AI trade that's taken the markets by a storm over the past year or so. The pause that we saw over the past week, is that a momentary reaction, a correction, or are there fundamental reasons at play here?
Hi, Bir. First of all, thank you for having me on your show. But that's exactly the questions investors are facing right now, right? And at least from how I see it, this is potentially a little bit of a check in the broader AI, bull trend that we've had. Now, two big things, if I was to just step back and look at what's been driving this whole momentum in the AI trade, that's been two big things, right? One, the fundamentals. We've seen the earnings story has been very, very strong. And two, we've had a significant re-rating. If you were to look at the SOX index, for example, we've had a significant re-rating of that sector. Back in March, it was trading at around 18x forward earnings. Now we are at 30x forward earnings. So both of the things have, driven these gains in the semiconductor names and the AI story in general. But now, of course, we're at a point where, it's starting to look expensive at about 30x. The earnings story is still delivering, but we need an upgrade there to continue to catch up with the kind of re-rating that we've already seen. And the massive crowding, the concentration risk that investors are facing, you club that with the other risks that are coming in the picture from the oil markets, from the inflation picture, from the Fed trajectory being questioned as well. I think that certainly demands a recheck of where positioning is right now.
Yeah. So, you mentioned valuations, but still appetite there. But when it comes to what we've seen over the past week or so, the AI trade is also moving from semiconductors, from GPUs into CPUs. So we're seeing a rotation within wider tech names as well. Where do you think the next earnings growth story when it comes to AI, where do you think the next leg of that comes from?
Oh, well, that's a very clear-cut, simple way to answer that would be to be in the AI story, you really need to look for the bottlenecks. And that's a very interesting trend that you've pointed out. We've been covering that at SAXO quite a bit as well, that the whole AI story started with GPUs and NVIDIA being at the center of that story. We have transitioned a little bit away from that. And, as the demand for AI itself has changed, initially we were obviously exposed to the generative AI part of AI, where you could, chat with a chatbot and get answers to your questions. Whereas now we are moving to questioning what kind of tasks AI can do for us. So we are moving into that agentic AI phase where the hardware requirements are certainly taking a step higher. And that certainly means that hardware side of the story, the upstream part of the AI value chain continues to see a lot of bottlenecks. And that's where, investors are starting to pile in as well. But so the valuation questions also become very relevant. Where the AI story is a little bit more complex to answer right now is certainly the software or the application side, because it's still hard to say who gets the benefit of using AI in their applications versus who kind of, gets eroded from here. So that, I think, is a very difficult place to position it. But the hardware side, with the CPU demand ramping up, demand for memory, networking, for data centers, those are still the places where there's potentially a lot of opportunities for investors still.
Yeah, and look, just to have a double-sided question, because we need to also address the elephant in the room, and that's the other thing that's been driving markets, geopolitics. Do you think that CapEx, the Max 7 are supposed to contribute about $1 trillion next year to AI-related CapEx. Do you think that that CapEx will continue to support valuations despite the surge that we're seeing in energy prices?
Not in a straight line, for sure. I think the questions around CapEx are starting to become a lot more strict compared to last year. Whenever a big cap company would announce added expenditures in the AI side, that would be seen with a lot of enthusiasm. Versus now, we've seen last week's funding raises by some of the big tech players. I think that is starting to be looked at with a very, very strict lens as well. And I think that's how investors are moving into this AI story. It's no more about mentioning AI on your conference calls. It's really about what kind of revenues you can generate because of applications around AI, what kind of costs you can save. Are you able to fund your expenses? Do you have enough cash flows for that as well? And especially, as you mentioned, in this high yield environment, inflation risk certainly coming to bite a lot of those long duration plays as well. I think a lot of the stories around AI are certainly becoming more nuanced. So we do see a lot more volatility in the AI story from here. It's not going to be a straight line up as we've seen in the first half of the year, so to say. Right. But more volatile, still a lot of gains to come through, but more selective and more nuanced.
More volatility to come then. There you have it. Charu Chanana, SAXO Chief Investment Strategist, with us. Now, coming up, Apple has introduced a slew of new products at its annual developer conference in Cupertino, including an overhauled assistant called Siri AI. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Now, President Trump is speaking to reporters as we speak in New York, and he's talking about the war in Iran. So here are some of the headlines that we have on the Bloomberg terminal. He's saying that negotiations are ongoing with Iran. He's also saying that he could have an idea about Iran by the end of today, in 2 days, or in 1 day. But the blockade in the Strait of Hormuz continues to hold. So some repetition there in some lines that we've been hearing from President Trump over the past couple of months or so. Those are the lines from his talking to reporters in New York now. Now, Apple has introduced a new generation of products at its annual Worldwide Developer Conference in Cupertino. This includes an overhauled assistant called Siri AI to compete with rivals. Bloomberg's Ed Ludlow was at the event and gave us the highlights.
Apple WWDC represented the biggest overhaul of Siri the company's ever done. It is Siri AI. It comes in the form of a standalone app. It comes with a chatbot interface. It is also interoperable. Siri AI will work across iOS with iPhone, macOS with Mac, iPadOS with iPad. You get the idea. The whole point is that you can start a project, something meaningfully useful on one device, and carry it over into another. It takes Siri from a place where it's a feature, it's a single prompt that elicits a single result, to a multi-step task, something much more of use. There's also visual intelligence, where now through any given device, Siri can help you see through the camera on that device. Much better functionality around assessing and analyzing image-based files. The bigger picture is that Apple didn't announce anything that's some kind of breakthrough feature. A lot of this they've been talking about for a number of years, but not yet released. Speaking of release, Siri AI goes into beta for developers today, but it won't be in a wider beta release in the US until later this year, English language only at first. If you're in the European Union, that doesn't come until March. In China, there's no timeline because of the regulatory hurdles that Apple is facing. One more thing. This was Tim Cook's 15th and final WWDC as chief executive. On September 1st, he hands the reins over to John Turnus, who takes on the CEO role. But right at the beginning of the presentation, before the pre-prepared, pre-recorded keynote even started, Tim Cook came onto stage to a standing applause and appreciation, basically, of the work that he's done. The main takeaway that Bloomberg has from this event is that Siri is actually real, and it's now doing things that are useful, even if those things were previously advertised. This is Ed Ludlow for Bloomberg News in Cupertino.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil edges lower as Iran and Israel agree to hold fire for now. That is after President Trump urged de-escalation. OpenAI files confidentially for an IPO, joining the race a week after Anthropic. A listing could come as soon as this fall. And Asian stocks rebound after their biggest drop since March. This is as Middle Eastern tensions ease and an AI rout pulls back. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a look at markets and how they're faring this morning. Higher by the second, it seems. U.S. futures turning up 0.2 higher. This is after the pause that we saw in the AI rally, those Broadcom results that we spoke about a weaker AI outlook. That seems like a blast from the past at this point, because investors are turning back to the AI story with caution. When it comes to the Asian equity picture, the Kospi just surged 6%. This is leading to the upside that we're seeing across the MSCI Asia Pacific, 2.4% higher this morning. Brent crude prices, the focus over the past 4 months or so, are turning lower this morning. We still don't have a deal in the Middle East, but Israel and Iran are holding fire for the time being. And U.S. 10-year notes, the yields on those not doing much this morning as we await CPI data tomorrow. Now let's check on the details of what is happening in Asian markets. Winnie Su is in our Hong Kong studio. Winnie?
Yeah, morning, Abir. Definitely more stability coming through for Asia as well. As you just mentioned, we are seeing MSCI Asia extending gains in the past 30 minutes already, now up about 2.4%, with gains mainly led by South Korea's Kospi index, which is up about 7% here and is in fact seeing its biggest intra gain in more than 2 weeks. Now, it really is that easing geopolitical tensions, lower oil prices, as well as investors now looking for more opportunities after that big AI sell-off. You can see that gains are also led by Taiwan's TAIEX index and also Japan's tech gauge Nikkei 225 outperforming the broader gauge of topics. Now you flip aboard, we take a closer look at these tech names because the MSCI Asia tech gauge is in fact leading gains today, up about 5%, and you can see that Samsung up more than 7%, but really SK Hynix up 13%, pretty much reversing all losses that we saw yesterday already. And this is really showing you that investors are becoming more selective right now, and they are seeing more opportunities in these big tech names that have better valuation and also a stronger earnings story. Back to you, Abir.
That's a really fast rebound that we're seeing. Winnie Su in Hong Kong, thank you. Now, oil prices are steady after Israel and Iran agreed to end attacks following a flare-up that threatened to derail efforts to end the war in the Middle East. While hostilities have eased for now, uncertainty around the Strait of Hormuz and the prospects of a lasting agreement continue to keep energy markets on edge. For more, we're now joined by Ziad Dawood, Bloomberg Economics Chief Emerging Markets Economist. Ziad, thank you for being here with us. No peace, no war, and oil prices around $95 to $105 a barrel for the coming weeks is what you suggest in your latest research. Now, what is your base case scenario for the Strait of Hormuz and oil prices?
Well, war and peace may change. We may get escalation. We may get de-escalation. And we did have a drop in intensity of fighting after the ceasefire announcement on 8th of April. But the one thing that has been constant is the disruption in the Strait of Hormuz. The world has lost about 10 to 12% of its supplies. Oil prices have gone up, and we expect them to remain elevated, somewhere between $95 and $105 per barrel, depending on the level of escalation in oil.
So what are the sort of major economic challenges globally? We talk about inflation, we talk about what it might lead to when it comes to governments or central banks raising rates. But what does this limbo leave the world at when it comes to those consequences?
I mean, look, the world has already changed the face of the global economy. Oil prices went up from $65 per barrel to around $100 now, maybe a bit higher, maybe a bit lower, and that changed the face of the global economy. It has resulted in higher inflation across the world. It has resulted in higher interest rates than they would have been across the world. Growth has slowed down and uncertainty is higher. And there's risk that things could, the war could cause more damage to the world if there is physical disruption, further physical disruption to oil, or if the inventory cycle, which helped basically offset some of the losses, come to an end. But the war has already, 2026 looks very different today than it would have looked without the war.
So do you think markets are too complacent at the time being when it comes to what is happening in the energy environment?
Not when it comes to oil. I mean, before the war began, we did write a big report saying if this war happens, the Strait of Hormuz gets shut, this is a $108 oil war. And it did materialize that way. So I don't think they're understating the risk, at least when it comes to the oil market.
Right. We'll have to wait and see where it heads to next. Ziad Dawood, our Bloomberg Economics Chief Emerging Markets Economist. Now, the escalation of the war in the Middle East is also reshaping Africa's credit outlook, exposing vulnerabilities and accelerating differentiation across credit ratings. Joining us now to discuss this is Zahabia Gupta, S&P Global Ratings Managing Director and Emerging Markets Credit Research Head. Zahabia, thank you so much for joining us this morning. I want to start by talking about some of the countries that you mention in your research, and starting with Senegal, where its foreign debt has been under strain in recent years, and its rating has also been downgraded. How important is it at this point for Senegal to get help from the International Monetary Fund?
Hey, thanks for having me. I mean, so just on the overall Africa credit outlook to start with, I mean, at the start of the year, we were expecting a lot of momentum and resilience for many sovereigns in Africa. And that was mainly on the back of three key tailwinds. One was lower energy prices, which was driving disinflation. The second was supportive financing conditions. And the third was structural reforms. Now, the first is gone and the other two are under question. So we are starting to see these physical supply disruptions affecting inflation, external balances, and fiscal positions across Africa as well. And Senegal is one case which already had quite a bit of pressure coming into this period. We downgraded its rating to CCC plus with a negative outlook. They have very high financing needs of around 30% of GDP. And if they don't get an IMF program, then that could raise more questions around longer term financing.
So your base case scenario for oil prices this year is $100 a barrel. We're currently at about $93 a barrel. How long would the disruption have to go on in the Strait of Hormuz? And how long do energy prices need to stay this elevated for you to reconsider the ratings of the African countries that you cover?
Sure. So actually, our base case for the war is that we expect the Strait of Hormuz to reopen in the second half of the year. But even then, we think that any reopening will be gradual and it will continue to be quite fragile. So we could see intermittent disruptions. And on the back of that, we've actually raised our base case oil prices to $105 per barrel for Brent for the rest of the year. Now, I mean, in terms of the impact on credit, so far we've taken about 15 rating actions globally as a result of the war. In Africa itself, we haven't taken rating actions directly linked to the war. But as the war continues and we start to really see the inflation pressures pile up, we've already seen energy prices come through, but the impact from food prices is still to come. And that will start to put more pressure on the external and fiscal positions. So credit pressure could start to rise the longer we get into the second half of the year.
So let's talk about some of the refinancing risks that some of the countries under your portfolio cover. What countries over the next year to 18 months do you think will have to face the biggest refinancing concerns, especially when you mention shallow domestic capital markets in some of those countries?
Yeah, I mean, so Africa, of course, comes into the shock with relatively elevated fiscal deficits and also higher debt burdens. So the average debt to GDP across our rated portfolio on the continent is about 60% of GDP. It has roughly doubled compared to the last decade. The interest burden is also quite high. So on average, the sovereigns are paying about 20% of their revenue in interest payments. So the fiscal room is more limited to manage this external shock. When we look at the exposures of the continent to the Middle East war, we looked at the net energy imports, we looked at the reliance on the Middle East trade, as well as their buffers on the external and fiscal side. And the countries that really came up to be most exposed were Egypt, Mozambique, and Rwanda.
And speaking of Egypt, I want to turn to North Africa a little bit. And Egypt had been going on a really good economic trajectory leading up to this war with managing its current account and the IMF program. But how does Egypt stand in this entire conflict when it comes to its current account, inflation levels, and the currency?
Yeah, Egypt is relatively more exposed to the conflict. I mean, we saw prices over March and April increased by about 5% compared to February. So the inflation impact is already showing in the numbers. Where they've also done some fuel subsidy reforms in recent years. Now, as the pressure builds with higher fuel prices, that also is leading to higher public opposition to these prices across the continent. So we do see some risk that some of these reforms could face reversal, and also the external and the fiscal pressures start to build up.
Zahabia, thank you so much for your time today. That was Zahabia Gupta, S&P Global Ratings Managing Director and EM Credit Research Head. Now, some hot flashes crossing across the Bloomberg terminal about the Kospi. We've been talking about it for the entire show, but Korean stocks have now extended their rebound to 8% after the chip-led sell-off that we saw over the past 3 days or so. That is an 8% gain. It's already the best performing equities gauge this year. So a rebound there just flashed across the Bloomberg terminal. Now, for a look at some of the other stories that we're following, a Kenyan court has upheld the impeachment of President William Ruto's former deputy, even though it found the process had not been held in a fair manner. The court said the ouster of Gachagua was final, but the Senate will pay him 50 million shillings in damages to vindicate the Constitution and restore his dignity. The ruling presents a legal hurdle to Gachagua's plan to run for president, as impeached officials are disqualified from holding state positions. Nigeria will begin repatriating citizens from South Africa this week following a wave of anti-immigrant protests and attacks. Officials say more than 500 people have been cleared for the first flights, with the initial plane scheduled to depart on Wednesday. The move comes as concerns grow over rising xenophobic tensions in South Africa. Confirmed Ebola cases in Congo have now topped 500 as health officials struggle to contain the outbreak. Authorities say tracing contacts and keeping patients in treatment remains a challenge, with dozens of suspected or confirmed cases reported to have left isolation facilities. The outbreak has caused 91 deaths so far, with health workers also facing shortages of supplies and lab testing capacity. Now, coming up, we will take a closer look at what investors are weighing ahead of the mega SpaceX IPO. That is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abamwad in Dubai. Now, there is little doubt Elon Musk's SpaceX will make a huge debut on the bourses. But even so, the boundaries between Musk's companies are growing increasingly blurred through shared capital, talent, and infrastructure. It is a headache for investors attempting to decide what the ecosystem is actually worth. Bloomberg's Danny Lee joins us now from Hong Kong to talk to us more about this story. Danny, how much will the company be worth in an IPO, and how much could it raise?
Well, we already know that institutional investors are placing orders in the region of $10 billion a piece. And therefore, this really does help that challenge for the banks who are trying to help raise for SpaceX, that $75 billion. And that, obviously, that sum would potentially make it, or will make it, the biggest IPO in history. And so, therefore, it will help fund Musk's visions overall. The timeline, though, for now is that we will see the banks close orders for institutional investors by the close of business on Wednesday in New York, and that will help banks determine the final pricing and also just the level of demand as well. But, of course, we will have to see how much retail investors will also buy into this stock, because they have been given an unusually much larger slice of this IPO, given the fan base that Musk has and his preference towards retail investors. Ultimately, though, this is an IPO that will help Elon Musk, the fact it could make him the first trillionaire in the world, and also that valuation for SpaceX over $1.8 trillion. So there are huge numbers we are talking about, and yeah, there's a lot of appetite in this IPO.
What a notion to become the first trillionaire in the world, Danny. But how much of a challenge is it going to be for these investors to sort of navigate their way through Elon Musk's sprawling empire of firms?
Well, when you look at what investors are buying into, it's a Musk premium fundamentally. It's not just the name SpaceX, which has the advanced technology and the AI. It is a sprawling set of ideas, of vision that Musk has. The fact that you've got hardware, software, AI, combined with the rocket launchers, the satellites, and this computing software power. Ultimately, though, investors will have to take note that with Musk's other part of the business, Tesla, the fact that it is struggling, it's also pursuing AI and other robotics and driverless advances, whether SpaceX eventually does subsume Tesla and take it over. So that could be an interesting dynamic down the road. But as you said, this is all about Musk and how his companies have become much more close and intertwined and helping each other, and ultimately making Musk ever more powerful and influential.
We're all waiting for that pricing coming later this week. Bloomberg's Danny Lee in Hong Kong with the latest on SpaceX. Now, you can read this story and all our previous big takes on Bloomberg.com and the Bloomberg terminal. Just type in NI Big Take Go. And coming up, China's President Xi Jinping vows to deepen ties with North Korea during a visit to Pyongyang, but avoided any public mentions of his neighbor's nuclear program. That is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abanwar in Dubai. President Xi Jinping pledged to deepen ties with North Korea during a visit to Pyongyang, but steered clear of any public mentions of his neighbor's controversial nuclear program. Bloomberg Chief Asia correspondent Rosalind Madison joins us from Singapore. Roz, has Xi managed to put China back as the #1 relationship for North Korea after it had gravitated towards Russia in recent years?
Well, certainly that's been the key goal, no doubt, of this trip by Xi Jinping, making North Korea his first overseas trip of the year. He's not been to North Korea in quite a number of years. And beyond all the pomp and ceremony that we've seen, and of course they both know how to put on a big military parade, there's a really fundamental goal here for China, and that's to remind North Korea just how important China is to the relationship. And in a really broad way, of course, the economy, trade and investment, cooperation, agriculture, on defence, on healthcare. So underscoring it's a really broad and deep relationship. And that's, of course, because ties had cooled between the two during the pandemic. And then Russia came in and has been warming up to North Korea. Of course, North Korea has been providing Russia with manpower, with weapons in Russia's war against Ukraine. And so perhaps drawing North Korea away a bit. So a real reminder here, in fact, of the importance of the relationship. And the Chinese economy is much bigger than the Russian economy. The Chinese economic assistance to North Korea can be much bigger. Certainly the Russian economy is suffering because of the war in Ukraine. So China definitely has much more to offer, and Xi Jinping is just quite clearly laying that all out.
So what about North Korea's nuclear program? Has the Chinese president made any mention of that? Has he made any mention of that?
Well, it's interesting, not so far. And of course, that's in tune with what China's been doing of late, which is avoiding really mentioning North Korea's nuclear program. Xi Jinping has publicly sort of called for, said he supports a nuclear-free Korean peninsula. He said that for years, and suddenly he's stopped saying it, and he's not been saying it so far in North Korea. Will he still do so? Potentially, but it does seem as though China is taking a step back from that and saying tacitly, you know what, nuclear weapons are going to happen on the Korean peninsula no matter what, and maybe it's even in our interests to take a different position there because it drives a wedge with other countries, including Japan, South Korea, and the US. So far, very quiet on that issue. Will he stay so? We don't know.
Bloomberg's Rosalind Madison in Singapore. Thank you for that update. Now, for a look at some of the other stories that we're following today, the Pentagon has accused some of China's biggest companies of supporting the Chinese military, including Alibaba, Baidu, and BYD. They were included in an update to the Defense Department's list after they were withdrawn from a previous version without explanation. The Pentagon is increasingly using the list to restrict companies' abilities to contract with the U.S. military or receive research funding. And a U.S. judge has struck down President Trump's $100,000 fee for H-1B visa applications, calling it an unlawful tax. The judge sided with California and 19 other states that sued to block the fee, arguing it exceeded the president's authority and would harm key public sectors. The ruling is a reprieve for tech companies that rely on skilled foreign workers, and the administration says it plans to appeal the decision. Now, a quick look at equity futures this morning. U.S. futures turning up a little bit, Asian equities higher. When it comes to oil prices, those are ticking down slightly this morning. Now, that is it for Horizon's Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with me for Daybreak Europe. This is Bloomberg.